Yesterday was the Lantern Festival in China, where I was at home eating tangyuan. Iran bombed the US embassy in Dubai. And this morning when I opened my phone, the market signal were very clear. The Bitcoin settlement index is around 50, and on the 15-minute chart, the market is highly unstable, showing clearly the short-term emotional swings. OVX is 73.99. In the energy market, that is considered extremely high value. The geopolitical risk coming from the Iran conflict and the potential closure of the Strait of Hormuz is pushing up the energy supply costs and causing significant turbulence. Starting to see signals in the Dubai real estate market as well. Some cash buyers, they have begun asking one specific question to me: are there any distressed deals? At the same time, a friend of mine who works in the international trade is worried about rising logistics and shipping costs. To secure liquidity, he listed all 4 of his Dubai properties for sale yesterday, packaged together and priced slightly below market value in order to recover cash quickly. So, when the market begins to panic, some people also sell assets to hold cash, but at the same time, others starting looking for opportunities. In fact, someone has already spent 30 million to buy property during this moment. Many people will ask, does this mean real estate is going to fall? Not necessarily, because the real estate market behaves very differently from the financial markets. Assets like Bitcoin or stocks can reflect the changes in sentiment within minutes, but real estate adjustments are usually structural and they often take 6 months or even longer than the fully play out. For example, in the secondary market, you may start to see some urgent sale properties, but in the off-plan market, developers usually do not immediately adjust their pricing systems. So, what you often see is a very typical structure. The secondary market may produce opportunities while the off-plan market remains relatively stable. That is exactly why many investors begin to search for deals during moments like this. Because for them, the real estate opportunity does not appear when the market is hottest. It appears when a little bit of fear starts to enter the market. History has shown similar situations many times. During the 2000 financial crisis, real estate markets in New York and London were extremely depressed. At that time, many people were afraid to buy because they believed prices would continue falling. But looking back today, who bought during that period actually entered a very favorable cycle position. Example is the 1997 Asian financial crisis. Hong Kong property price fall down to 60%. At that moment, many people believed the real estate market was finished. About 20 years later, those who bought assets during that crisis ended up earning enormous returns. Markets have always worked this way. When sentimental becomes most tense, some people panic and sell assets, while others quietly begin to accumulate them. So, from an investment perspective, the more nervous the market becomes, the more honest price tends to be. Many opportunities appear pricelessly when others feel the most uncertain. But the decisions people make and the emotional pressure will always vary.